Hi everyone, and welcome to tonight's Q&A on the 25th of November. Can I have confirmation you can hear me okay, everyone?
Yeah, I can hear you, Charlie.
Great, all right, perfect, welcome. So one more week before non-farm payroll next Friday, so I reckon we've got a little bit more action to go before the markets start to get a little bit quiet. You can definitely see some pretty good movements. I mean, look, they're continued on really, haven't they, even from last night's webinar. Like everything looks relentless at the moment, which is great because I know a lot of people are in and holding their positions. We'll do a quick scan of the currencies, then we'll have a look at some indices. And I've got quite a few questions that we've got to get through as well regarding all sorts of things, actually. So looking forward to getting into those. Just before we start, is there any live questions that anyone wants to throw in before we actually start getting into the nitty gritty? Not yet? All right, cool. That's all right. We'll jump into questions a little bit later on anyway. So that is all good. All right, so let's start out with the Aussie USD. So hopefully you can see my chart okay. This has been great. I mean, it's the only way I can put it really. Like when we can predict a move like this and it gets to the target. I mean, yeah, I'm out now, right? My target was 72. I've been wanting the 72 for quite some time. So, it kind of hit it. I know some people are still in and they're looking to go a little bit lower, and it may well do it. Look, like I said, longer term, it's probably going to 70. That's probably fair value for it. And I mean, that's not that far away, but this has been a very, very big move down. There's no question about that. And I think what I like about this one is it's actually come down in a very orderly fashion. So, and by that I mean, it hasn't gone up and come down in half the speed. It's actually come down slightly slower than it actually went up. And the way it actually got up there was slightly, unusual, especially this last part here. So I suppose there's no surprise really to see it come down, off those highs. But realistically, it's given you many, many opportunities to get in. So is anybody actually still in this? Is anybody still wanting to actually go shorter from this point onwards? No, not really. Okay. Hopefully that means everyone's taking profits. I'd like to think so. I mean, you couldn't possibly have if you were actually trading the USD, the Aussie USD short. I don't think you could possibly have screwed it up because it hasn't even had a pullback. So if you were shorting it, you couldn't possibly have not got out, right? So that being the case, are people trying to actually go long from here? And that's probably the $1 million question. And look, if it's going to go long, this is a pretty strong support zone. No, there's no question about that. But the only thing that worries me about that is, of course, if the sustained movement keeps going. I mean, the dollar index, we'll go to that. I mean, we'll have a very quick look at that. That looks just, absolutely. It's almost parabolic, as Thomas would say. I mean, it got so close to the 97 target that we've kind of aimed for quite some time, even last night. That, look at the MACD power still in it, like far out. Like, you'd be very brave to trade against that. And I love it how people start saying, like there's always a fundamental reason as to why, this has gone to this level. But the reality is the technical said it was probably going to go there way, way, way before people start talking about it. And I think that's probably the key. When you see people start to talk about it on TV, the dollar index strength is really starting to kick in and blah, 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 blah. I mean, most of the move is already gone. Like that's the, what they're talking about, it going to 97, 98 now that it's at 96. Like, thanks for the heads up. Generally that worries me when people start to talk about it. When the experts start to talk about it, that's when I start to get a little bit concerned that our run might be starting to come to an end. So but look, at this point in time, it's looking very, very, very strong. So that doesn't bode well for any of these reversals. So look, for me, I mean, you all know what I want. Dave, you there?
Yeah, I'm here, Charlie. Yeah, mate.
Can you tell them what I want? What do I want to see before we go long on the Aussie USD?
Oh, well, you want to see it to start to consolidate a little bit. You want to see that to break the downtrend line, to start an uptrend, you want the lightning bolt. Yeah,
There you go. The magic lightning bolt. It's all we want. Yeah, a bit of consolidation, a bit of a lightning bolt. We're not asking too much. I don't think we're asking too much. I mean, in fact, you can't trade without it, right? I mean, realistically, you don't want to be trading without it. I think that's probably the point. If you yeah, if you're looking for the reversal, that's fine. If it doesn't come and it continues short, well, yeah, that's okay as well. But realistically, you want to be making sure that you are waiting for that lightning bolt. Without the lightning bolt, we don't have anything. So, and when I say lightning bolt, the problem is people go to a 5-minute chart and they see a lightning bolt and they go with that. Now, yeah, we all know why that's not right. Okay, I mean, at the end of the day, we're trying to reverse what has been a systematic sell-off, you know, for the best part of 3 or 4 weeks. So a 5-minute chart with a lightning bolt at a level of support is not going to cut it. Now, one of those support lightning bolts off a 5-minute chart will eventually work out. Okay, because everything starts from the bottom, but the problem you're going to face, of course, is that you're going to have potentially 10 or 15 of those fake out on you first. Like you'd have 10 or 15 lightning bolts on a 5-minute chart all going long, and none of them will actually continue the long. Most of them will probably peter out and hover in the zone. So realistically, yeah, you want to wait for a bigger time frame. Now, for me, on a chart like this, I see a daily that is going down with no pullbacks whatsoever. We know MACD looks horrible. Even though the level looks good, MACD still looks horrible. You got to go to a 4-hour. Okay, so the 4-hour is the time frame that you would be looking for that change of trend. Even then, I would be a little bit skeptical, and it's got to be above 72. But for the most part, this is what we're looking for. So what I like about the 4-hour is the opportunities it's effectively giving you all the way down. So if you look at the daily, you say, well, all right, I think I had one very high quality opportunity to get in, and the rest of it was pretty hard because it went in nowhere near the 20 moving average. And you'd say, well, all right, I'd probably cop that. But yeah, that was your quality entry, by the way, in case you missed it right there. But then, it sold off fairly sharply. So there's no question about that. When you go to a 4-hour though, on the 4-hour, you see the pullbacks. You got two. You could easily have taken that one, 3, 4, 5, 6. Like 6 opportunities to jump in on what is a very, very strong downtrend, right? So really what you're looking for is when you can't see it on the bigger time frame, you go down to that smaller time frame and look for the entry points on that. I can't stress that enough, understanding the time frames for what you're trying to trade. So again, it's very similar to trying to reverse a major trend on a 5-minute lightning bolt. It just doesn't make sense, right? And I know I say that, and you probably think, well, well, obviously, Ty, like, why would you be trying to reverse a trend on a 5-minute chart that's coming down over a period of 3 weeks? You would be amazed how many people say, oh, this lightning bolt didn't work, and I get an email with a lightning bolt drawn on a 5-minute chart, trying to reverse a serious trend. And you're like, I can understand why people get a little bit confused, but you've got to. I mean, doesn't it make sense? I think, am I being like, Dave? Tell me if I'm maybe being a little bit unreasonable, but to me, doesn't it make sense that the time frame to reverse the bigger the trend is, the bigger the time frame that needs to be, kind of giving the lightning bolt? I mean, to me, it's logical. Like it's logical. It's not me. I'm not making it up, right? This is what price action does. I'm not just creating my own set of rules and saying this is what we do. I mean, to me, the only reason, the way I wrote the course is through logic. We learned through logic. Like, we tried all the tricks and tips of all the experts, 10 years ago, and not many of them worked. So if you go through the Ultimate Masterclass, for instance, nearly every single step, I reckon, is a logical process that you can say, that makes sense. Yeah, that makes sense. That makes sense. Every part you go to, you'll go away thinking, well, that makes sense. And it's almost obvious. why you would do it, but maybe you didn't think of it because sometimes it needs to be pointed out to actually see the blatantly obvious in front of you. And I can totally understand that. But to me, this is one of those occasions where it doesn't make sense that the price consolidation on a 5-minute chart is going to reverse a daily trend. It just doesn't make sense. So you've got to apply logic. And I know I could tell you which time frames to use. I mean, I could tell you, and I do. I mean, in the Friday videos and in these ones, I do say which ones I want. But I guess I'm hoping that people, I know a lot of you guys, the every week devotees that are in here know exactly what I'm talking about, and these emails aren't coming from you. Yeah, most of the time they're coming from people who have sort of started the course and never really finished it, and they just come to us for answers. And that's kind of a bit of that kind of grates on my nerves a little bit because, you know, it's kind of, it defeats the purpose of the course. But anyway, I always, if you want a rule, if you want a general rule as to what lightning bolt you want to use, the simplest way is to go identify where the trend looks the strongest. So in this instance, I mean, you can go to any time frame, right? I mean, obviously, even on a weekly, it looks really weak. But if you go to that, you wouldn't say that's a big, yeah, it's a big move, but it doesn't really highlight how powerful this move has been. The daily really shows that. So to me, it's all about the daily for this short, right? So the best way to either reverse this trend, at the very, very least, I would probably want to see a lightning bolt on the daily to really reverse a big trend like this. But at the smallest time frame, I would go as the 4 hour. Okay, so if we identify the trend on the 4 hour, then the 1 hour will be where you want to see the lightning bolt. Don't go 2 or 3 time frames behind it, because all you're doing is looking for a trade at that point. And there's certainly no guarantees that is going to be the one that goes. Eventually, one of them will. I'm not saying it won't, because it will, obviously. But you might get that 10 or 15 breakouts first that won't actually get you into the market. So that's what we want to avoid, right? We want to avoid those fake outs, and we want market consolidation. Now, why do I like a 4 hour consolidation period? Because at the very, very least, to have a lightning bolt changeover, you're going to require probably 10 to 12 candles at least, right? So you're going to require maybe 2 or 3 days worth of price action of consolidating at a zone to give you the clue that maybe price is starting to shift. So that's really, really important. I think that if you say that now, if you do that on the 5-minute one, we could have a 5-minute lightning by the end of this session. And I think that's probably, maybe I should have said that first. That's kind of what highlights how important it is. Think about how many days or how many hours it's going to take for price to actually consolidate. So on a 5-minute chart, if we consolidate for the next hour, are we going to be confident that's going to reverse that trend? Well, of course not. So yeah, but if I said this is going to consolidate for half a week and then it's going to spike up, I'm a lot more confident in that. Okay, so that's what I'm looking for. Think about the time frame of how long a lightning bolt takes to form. Think about the trend, how strong the trend actually is, how long it's been coming down for, and then match them up. But you can't go too far wrong when you only go one time frame down on the major trend. So does that make sense to everyone? Yep.
Yeah, sure does, Ty.
All very logical.
Logical,
yeah,
right?
Yeah, and I was just going to say too, like the lower the time frame, the less reliable it's going to be. So, if you're, putting all your faith in a 5-minute lightning bolt, you're really taking a bit of a risk there.
100%. Now look, don't take me wrong. I don't want to get hate mail from the 5-minute and 1-minute traders, right? So don't take me wrong. A 5-minute lightning bolt's got its place, but you have to know its place. Now, if you're trading a 15-minute channel that's only going for 20 or 30 pips, for instance, that's okay. Now, of course, you can use a 5-minute lightning bolt for that because it's in the range of expectation of what you're actually expecting the market to do, right? You're reversing a mini trend off a 15-minute channel that might only be 30 pips wide. Of course, that's fine. You can use it for those sorts of things. What I'm saying is, don't try and reverse a 3-week trend with a 5-minute chart. That's what I'm trying to get across. But again, obviously, logic kicks in. I'd think, and I think most people are getting that. But hopefully you can see this. This is the part that I really want to probably drum home, because a lot of people always say one of the biggest probably questions I get is I missed that trend, I couldn't get an entry. All right, so, and it's a common problem because you look at, like I say, you look at the daily and you say, well, that was all good and well, but according to the rules, we only had one entry and the rest of it was just free fall. How do you enter that? You know, and it's a fair enough question if you're not looking through the time frames, but straight away, my number one call is to go down through the time frames, okay, and then isolate the pullbacks. Okay, and a 4 hour is a serious time frame. So each and every one of these was a good sell-off. Okay, so you're able to continue. You knew the trend was right. Not like everyone knows the trend is going in a particular direction. They just struggle to find the entry point to get in, and that can be a challenge. So always go to the time frame left, and if there's nothing happening on the 4 hour and it's still too steep, you go down to the 1 hour, and then start looking for the entries there. Okay, and you'll always get them. The 20 and the 50 pullbacks are magical for that sort of thing. So very, very important. All right, let's move on to the US dollar CAD. So US dollar CAD doing nice things still. Yeah, a bit of a pullback, but yeah, nothing too serious. It's, I mean, it's not that far off where we expected it to hit the second major target, really. I mean, I thought it's probably going to get to 127, 128. It's already got to the halfway mark in between them, like 127.50 nearly. So yeah, this still looks strong to me. I don't know. I mean, it wouldn't be the end of the world if it came back, to the 126 sort of low 126s or high 125s for a pullback of some significance. I don't know if the 20 is going to catch up in the time that this is actually going to go without it. It looks really, really strong. This is a very, very small pullback, really very shallow. Are you still in? Is anyone still in this trade? Is anyone still long on this one? Just out of curiosity.
I got out, Ty. You know why? Good object lesson for everyone. Had a mate come over on Monday, and the USD CAD was consolidating a little bit, and he's like, "Oh, that's going down. That's going down," and he got into my head. And even though I knew the dollar was strong, even though I knew oil was coming down, he got in my head, and I thought, "Oh no, I'm in good profit now." And this one last third I've kept on. It's even gone on ahead, and I've even got more out of it. I'll just close it out now and let it go. Later on that afternoon in the UK and New York sessions, the US dollar boosted up again, and I missed out. And so yeah, don't ever listen to what any other one else is saying. They get in your head and they mess with it.
Yeah, and I second that, and I also say that even don't let, for those of you who have got a sound technical plan, and you like what you see and it makes sense to you, I suggest that you don't even let Thomas and I get in your head. And the reason I say that is because we're not always right. Yeah, we just have strong opinions on what we think, but it doesn't mean that we're always right. And if your analysis is sound, you might be looking at a different type of analysis that we haven't actually factored in, right? So I encourage people that if you're got belief in your trade plan and you see it, question. Don't just automatically take it out because someone said, or Ty said this, so I'm probably wrong. In no way, shape, or form should you be doing that. Ask the question and maybe post the what your thoughts are, because there's a lot of things that we don't see. Like we're not the market gurus. Like we miss a lot of things. So definitely always stick to your plan unless you see the logic as to why it might not work out. And yeah, don't just listen to someone and act on their. Don't let them get in your head, Dave. Just don't let them get in your head. Because they don't know what you're seeing at the end of the day. So I think that's really important. Don't let people mess with you. I'm not sure what else to say about the CAD. I mean, I think that a pullback would be nice to give us another reload zone. I'd be happy enough for it to continue on. If it gets past 128, you know, I think that it's probably gonna push to the 130s. I'm not sure if it's gonna do that without a decent pullback first, but it wouldn't surprise me. Like it did here. You can see that big pullback, then it boosted off. It wouldn't surprise me to see it do that. That would be the ultimate load up zone here. You know, if it came back and tested the 126 level, 128.80, 125.80 area, I'd be really impressed with that, because that is just a really, really nice level to start picking this up again, because it's not showing any signs of weakness. Okay, that's and I think that's probably, you know, when you look at, I know we very rarely look at weeklies on the CAD, but you know, in hindsight, you know, you can see the indecision candles were there, you know, before even we had the big push off. So we shouldn't be surprised that it's doing what it's doing. But you know, I am also conscious that, you know, there is a lot of rejection stuff going on here. So it's at that zone, but it is trying to break it. And if it breaks up past here, then it's going to test these highs, because there's no reason why it wouldn't. All right, so that is the CAD. US dollar yen. This one is, yeah, I like it a lot. I'm liking it more and more. Yeah, this pendant is well documented. We still need this to close up here. You know, we make no mistake, we need another 2 days of strong action on the US dollar yen. And if we get that close, I think we're well on our way to that potential 118 level. Okay, so definitely a possibility that it can do it, but it needs to, you know, it really needs to strengthen and stay up here. We don't want to see a pullback all the way to this level again. We don't want any part of that. All right, I'm not going to go on too much about this one, because I think that you know, we can see it's doing its job. So it's pretty good. Mark says there's a flag on the 4 hour. Are you talking about the US dollar yen, Mark? Is that the flag you're talking about?
Yeah, mate. Yeah, zoom in. Yeah.
Yep. I'd agree with that. Yep. Very interesting one. It's actually a very aggressive one. I mean, that's a very, very aggressive flag, really. But that shows that sort of points to the bullishness of what we're seeing here. You know, that it's a very, very strong pattern, no question. You can make a case for it, and if it does, you know, that's just going to play into, you know, what we really want to see anyway. So yeah, I'd certainly be happy enough with that. Hey, tell me, guys, is my microphone not too loud, or is it not too bad today? Because Tom reckons it was really, really loud last night at the webinar. Is it reasonable or not?
It's
very balanced. It's okay.
Is it really? Oh, good.
Yep.
Yep. All right. Perfect. Good. I think sometimes I get the feeling that I might have pinched a wire on it, and sometimes it goes a little bit crazy. So hopefully it behaves itself. But if it does start to get reactive, certainly let me know. I'll have to invest in a new wire. And I don't like that these microphones wires are like really big corded things. They're not like the normal ones you can pick up from office work. So yeah, they're a bit of a pain in the ass to get, actually. So let's move on to the dollar index, the one everyone's talking about. All the experts are talking about it now. It's all you hear on all of the big news channels. So that scares me a little bit, but you know, there's no denying the strength. You can see that we've had, this is a daily. The weekly is looking extraordinarily strong as well, of course. Very, very big moves. You know, for mine, it's at a role reversal zone. Like, you know, it's already got to the level that we kind of expected it to in the first move. So you got to look at it and say, well, how much more has it got before it actually does pull back? It's unusual that it would go much further. And yeah, you've got to let history be your guide. Most of the time, even if you go back through the biggest moves, like even some of these moves were huge. You know, you sort of look at it and you compare them and you say, well, it's kind of due for that bit of a consolidation period. And if it's going to consolidate or it's going to reverse and reject off a level, then you're going to look for that role reversal zone that it's going to do it. Okay, so if we draw, you know, the horizontal here, I mean, I haven't called the short on this in a while. You know, I've been very, very long on it and very, very excited about the long, because this has been the opener for all of the other trades that we've been doing. Like, this is the one that's really opened everything up and started the ball rolling. So there's no there's no worries about that. But it is at that level now where I'd start to be a little bit more cautious. Now, Again, I don't long this. I short the euro, of course. So it just makes more sense from the spread point of view. So yeah, we will look at the euro again in a second. But here, like when we look at this, we say, well, it's probably time. You know, I wouldn't expect that it's going to go blasting through here and getting to 98, 99 without, you know, some sort of pullback. A lot of people are saying that it's doing this because of, you know, Jerome Powell being reinstated. Yeah, I'm not so sure about that. Yeah, it may play a bit of a part, but you know, I don't know. Like if that's what you're relying on to trade, I'm not so sure it's going to be a great turnaround for you. I think we had the signs, but I think the signs now are that we're probably going to see a little bit of at the very, very least consolidation, you'd think, and maybe a bit of a pullback. It's probably what it's due for. And yeah, the euro highlights that. Let's go to the daily on the euro. Now, here's a really, really interesting lesson. This is something that I want to actually point out because, and this is why we always say, wait for the confirmation. Okay, for all intents and purposes, this little area here was a perfectly formed morning star. No question about that. Morning stars don't get prettier than that, and you don't see them on a daily very, very often as clean as that morning star is. But can anyone tell me why? Let me just zoom it in just a little bit more. Can anybody actually tell me why, even though it was a perfect pattern, you would never have traded it? Can anyone tell me why?
Because the MACD's against it and it's in a strong downtrend, and one candle or a 3-candle pattern isn't necessarily going to reverse it.
Yeah, all very valid reasons. Not to go long from there, absolutely, very valid reasons. But the biggest key, even if you wanted to ignore the MACD, even if you wanted to ignore the very aggressive downtrend, and you know, even if you wanted to ignore everything that you know, would point towards it not stopping here, the most important thing is that it didn't actually close higher on the next candle, didn't even open higher, didn't do it. Okay, the key to these patterns is you enter when the next candle breaks higher. As you can see, the next candle actually started a little bit lower and pushed down straight off it. Okay, so and this is why you always wait for the confirmation to actually happen. You don't just jump in and say, all right, it looked for all intents and purposes like it could have easily gone long from here up to the 20 moving average. And that would be a very perfectly reasonable move, one that I'd almost expect. I would have almost expected that, but you'd never have traded it because it was so weak. The euro's been so weak that it couldn't even muster up enough power to actually make a new high on the next candle. All right, so always be wary of those sorts of things. But look, you know, it's at the level now. It's at the 112, almost a promised land for the euro. And again, you know, if you go right out, you got to go quite a bit out to actually see, you know, what this level is. It's a very, very strong level. Okay, it's not. Yeah, there's no denying it. It's just like the dollar index's level is really strong here. This is a weekly chart. All right, so really, really very big time frame, resistance everywhere, support everywhere. You're talking about months of support at a time here. So, you know, it's a very, very big sticking point for it. It would be, you know, quite amazing if it actually kept going from here without a pullback. I'm not saying it's not going to stop here. I think you know, it's definitely got potential to keep going lower, but in the interim, it would take some pretty extraordinary news or real momentum to break this level and actually keep going without a pullback. It hasn't had a real significant pullback in ages, and you'd think if it's going to find one, this is going to be the area with the dollar index at, you know, pretty aggressive resistance. This one a pretty aggressive support. You'd be looking for, yeah, that sort of reversal. I'm like I said, not going long for by any stretch, but probably maybe this is the time you might be able to see a counter trend happen. Okay, now again, the 4-hour has been the time frame that has basically helped short this bad girl. What we want to be looking for at the very, very least, is a change of trend on the 4 hour, of course. Just like we did on the Aussie, we're looking for a change of trend on the 4 hour. If we get the lightning bolt effect on that, then we can start pushing up and probably just going, in the first instance, I'd be going up to this level here, allowing the moving average to catch up. It might be a little bit lower by the time it gets there, and that would be my target. At that point there, that's probably as far as I would take the counter trend. I don't know if I'd be going for any more glory, mainly because it's still, I think what it may do is bounce around this area for a while. So, and bouncing around this area doesn't necessarily mean it's going to go all the way back to 115. So that's the point. You want to be, if you're going to counter trend, keep your expectation well and truly in check. Okay. So and that first real problem for it is going to be the 20 moving average. So I can see it being stuck in this zone for a little bit, actually. Does that make sense to everyone? Can you see why? We're obviously not going. We're not trying to go back to 115 here, but we're not getting excited about the short either. Yeah, do those levels make sense?
Yeah, it does to me. And I mean, the DXY is coming up to resistance as well. So, everything's sort of pointing to a little bit of a slowdown of that whole thing.
The two definitely go hand in hand. And when they are sort of preempting what the other one's going to do, just like both of them are, obviously at very key levels, I think you got to pay attention to those levels, of course. Let's go over to let's have a look at a couple of the big indices, and then we'll go to some of the requests. The S&P, it's I mean, far out, like that is a decent little consolidation zone starting to form now, isn't it? Like this is basically, well, I mean, it's kind of a mini channel. I mean, it is a mini channel of sorts. I've never used this tool. Oh yeah, cool. In all my time, I've never actually used that tool to see what would actually happen. I'm going to draw it again. Hang on, let's see. Did it go? No, I don't like it. Too hard to operate. All right. What I was trying to do was actually just see if we can actually highlight a channel that is actually forming, and we can. This is, I'm not a big fan of channels at an all-time high or a very high, like a high that hasn't been. Not only is it an all-time high, or even on stock or indices that have reached a high that they haven't reached in a very, very long time, because I don't know whether they hold up quite as well. And I think you can get kind of sucked in a little bit on the breakouts, because these tend to give you a lot of fake outs on both sides, by the way, not just the one side. If you're going to trade it, I would probably stick within the boundaries of this channel. I wouldn't be keen on going to all new highs just yet until it actually does it and starts to get the momentum going. I expect volatility in the next 3 weeks. I don't think we're going to have a quiet Christmas. That's, it seems to me that we're probably going to see a bit of volatility. Now, whether that comes in the form of a short and then a long, that often happens. It does often happen that the first week and a bit of December is weak, and then the Christmas rally kicks in, market goes up, and all of the jazz that happens every year that everyone talks about may well happen. But I wouldn't expect it. It's just going to go up and up and up from here. I think that we're going to probably see a little bit of volatility and a little bit of a shake-up prior to that. And what I would probably like to see beforehand is, maybe price getting back down to that 4,500 at the very, very least. I'm not going to be interested in this until it does. I don't care. I don't care what people say. We don't have to trade it, just whether people want it to go long or not. Until it pulls back properly and gives us a proper entry, it's hard to long it, right? So, but here it's not a bad long. Like if it gets back to this level, it's only 150 pips away. It's not like it's a big move. It's only 150 points. I could do that in a night. That is not a bad level for it to turn around and maybe start looking for longs again. This channel is just a little bit small for me. Like it's very, very small, very tight, very small. No, I don't like it. So for me, it needs to pull back. I did have a question on this one. Hang on, just let me. I'm going to quickly sift through my Discords because I did see a question on the. I'm just going to find it. Hang on. Oh, okay, that's right. Do I expect that it's going to get to 5,000 in the coming months? That was the question. I don't know. I don't know. That would be a guess. I mean, even if I said I did know, I wouldn't really know. That's just if the market has enough, push up momentum. Is there enough positive news coming out? Are the US economies running that well that it can get to 5,000? I mean, probably could. I'm sure it will in time, but to try and gauge that in months, I'm not so sure. I think that it's had a phenomenal run. We know this. It's well documented how big this run has been, but it is due for that. Probably you look at the week candles here. When I say week, I'm talking about weekly. And you've got indecision happening everywhere at a time of year where you probably expect that indecision that is generally mixed in with a little bit of volatility. Don't forget, volatility doesn't automatically mean the market's going to go up. Okay, volatility means that the market's going to do something, and that could be in the form of up, down, sideways, aggressive. The VIX is still very, very low, given where we're at, but you can see 3 very, very indecisive weeks of trading, and that's highlighted by the fact that it was actually in this channel. So I look at that and don't get excited for the long. That to me looks like a market that's starting to get a little bit tired, in my opinion, especially on a big chart like the weekly. Does anyone have an opinion on the S&P 500? Kilted, what do you think? Are you there? Did I see you there?
Yeah, I think it's a difficult level at the moment. I think the Dow 30, just posted that, is probably a bit more interesting to look at.
Which one, sorry?
The Dow, the US 30. Yeah, I mean, folks are calling it short, but it's looking a bit flaggy for me on the 4 hour, even on the daily.
Let's go. Yeah, gee, certainly a little bit different to the other one, isn't it?
Yeah, I think that looks a bit flaggy. I mean, I'm reading some articles that's calling it bear with on the daily, calling like head and shoulders and waiting for the break and stuff. But I just look at that and see a flag.
Yeah, I guess the only thing that I sort of look at, man, I should look at the Dow more. I haven't looked at the Dow in ages. Yeah, the only thing I'd say about it, it's come back a bit. Like the only thing I would say about the Dow is it's got a lightning bolt. I'd be watching this carefully because this has got a bit of a lightning bolt now. One that the S&P certainly hasn't got. See that? And the S&P certainly hasn't got that. Like when you compare the two of them, like they're usually so close together, but they're actually poles apart at the moment. Like that doesn't look flaggy. That doesn't look lightning bolty at all compared to where did it go? Let's have a look. Oh, this is the that's right. This is the Russell that we had up the other day.
Russell,
yeah. It hasn't done a hell of a lot since last week. It sold off a little bit, but one still definitely to watch. What happened to my Dow?
It's gone to the end here.
Yeah. So wow. Yeah, I'm glad you pointed that out. Actually, I'll keep this on the chart and keep an eye on it now.
Because it looks as if it's come back into that sort of demand zone. Like if you draw where it is now, just at that, is that the daily 50? It looks as if it's come back down to test that, and it's looking quite long. If it sort of continues,
at least
up.
If you're going to trade this long, you got something to aim for.
Yeah, exactly.
You've got a decent zone to aim for.
Yeah.
And this is what I'm saying. Like the other one looks so crap that you're only going for like 20 or 25 points.
That's
it doesn't
right.
make sense to actually trade it. Yeah, like it's
And,
you
and
know,
your stop's pretty obvious there as well, under, you know,
very
give
obvious.
it-
Yeah, this is an easy trade.
Yeah.
Whichever way you take it, actually, it's pretty easy because it's clean. You've got the you've got the low there, so you know where your stop loss is going to be if you're going to go long. And indeed, if it does short off and it breaks and closes to a new low, you got a very logical stop loss for that one as well.
Yeah,
And this is
I just
clean.
look at it and go,
Clean
what's the
chart.
better trade? What's the easier trade, right?
Oh yeah,
It's probably-
absolutely, yeah.
Yeah.
Yep. It's a good one. I'm glad you pointed that one out. Let's leave that one on our hit list. We will definitely have a look at that every week from now on, because I think that's a lot cleaner. That the S&P 500 doesn't make any sense at all at the moment. Can't even find a trade on it, but I can see how we could trade this one both ways actually, because there's range. There's actually range to get into. I think that's probably the highlight. You know, you can find a reason to trade either side and get a result.
Can I ask a question on that, Ty, on the US 30?
Sure.
So the top 30 shares in the US stock exchange, can you use that as a leading indicator for the US 500? Like if the big shares start to tank, surely all of the smaller cubs are going to follow, aren't they? Is there any correlation?
There is, but you've got to be. There is, but it is still very tech heavy. The Dow. And the problem is, you still are comparing. It's not like the S&P 500 versus the ASX 200, where we get very, very limited. Once we get out of the top 50, our companies start to get quite small. Like you'd be surprised how small some of the companies are, in the last 10 of our 200. Whereas in the US, 500 companies they're actually still very, very big companies. Company number 499, 498, and 500 are still extraordinarily large companies. So you're getting a lot bigger snapshot of how the economy is really tracking versus the top 30. In saying that, though, they are generally very, very closely correlated, like very, very closely correlated. These two, when they deviate even just a little bit, sometimes one leads the other, but not the way you would expect. So it's not the first time that the S&P 500 would lead the Dow, and vice versa. So it's a difficult one to try and track, I suppose is probably what I'm trying to say. It's not one that you could rely on and say, all right, this is weaker than the S&P 500, therefore, that one's going to catch up to the other. You got to be. It's difficult, and they switch and swap. So there's no kind of rhyme or reason that you can apply, I guess, logic, if you like, to it, if that makes sense. It's not like the US dollar yen and not the US dollar. It's not like the dollar index and the euro, where they kind of have to be correlated because they're locked together. Basically, they're entrenched. These two are, but they don't necessarily lead each other in any orderly fashion. They do generally come back, though. They generally come back into line. They can separate a little bit and come back into line, but it can be a slightly difficult trade because you don't know which one's actually going to short back to the other, or whether the other one's going to long back to, like say in this instance, this is going to long back to the S&P 500 to catch it up. So they're correlated, but it's very difficult to trade that correlation, if that makes sense. Hopefully that makes sense. The Russell, we will have a look at the Russell again in a little bit more detail, because it is back inside this mini channel. It did break out. It didn't find support where you would have expected it to find support. If anything, Mark, probably this is the one I would use as a leading indicator more than the others, because this one is the broadest of sections of how the economy is really tracking. If this one starts to short, the economy is kind of screwed in the shorter term, because this is a big broad section of, it's a better representation of what's really happening, I suppose, if you like. This is more our S&P or our ASX 200, where the companies at the back end, they're the bread and butter companies that you kind of still need to not ignore. That's probably the point. So this is definitely one to watch. And if this one started to short aggressively and the other ones weren't, then I would pay attention. Then I would say, well, hang on, maybe that is the leading indicator that we're after, because the top two, these can't go short and the other ones still stay strong for long. That they do have to at some point, catch it up. So this is the one I would probably use rather than the Dow, if that makes sense, because it's got the broader section. I mean, it's got 4 times the amount of companies in it for starters. Does that make sense, Mark?
Yeah, that's good. Takes seasonality out of it as well, I guess.
Yes, it does. Yeah. They can be, look, people spend a lot of time trying to work out what happens at particular times between different indices. That it comes very, very complex when you start to do that. You need to look. I'm all for seasonals. Don't worry about that. But as a broad, I don't try and pinpoint which one's going to do what unless it's very, very obvious. Say like gold is. Like when we go to gold, we know that it. That's silver. Hang on, we'll have a look at silver again in a minute. I had a question on silver. Let me go back. Let me go to gold. When we go to, have I lost my markers? I think I have lost my markers. All right, gold. Like we know, it's it's been said many times that it generally finds strength in the first week of December, leading into pretty much February. So it's hovering in that. Where's my gold? I must be going blind. Maybe I've taken it off my chart. All right, I'll have to bring it on. Hang on. I must have replaced it with silver. Now I've got 2 silvers instead. All right, we'll quickly find it. I've got to go to gold because I do have a couple of questions on it. Right. Okay. All right, so the question was, could it get to 1750 before the seasonals kick in? Yes, it could possibly. I probably don't really want it to do that. I think I'd be quite happy for it to stick around this area here. Really, the zone I like is the 1780 to 1820. That's where I'd probably want to see the biggest bounce. Okay. I don't really want to see it down at, I mean, it wouldn't be the end of the world if it was down at 1750, but I certainly wouldn't want it any lower. Let's just say that. That would be as low as I'd want it to go if we're going to rely on what's happened in the last 7 years, if you like. So can it get there? The question is, can it get there? Yes, well, of course it can. Will it get there? Well, I mean, that's anyone's guess. I couldn't tell you that. I mean, it's at support now. 1780 is a very strong level for it. It definitely is. I would probably think it would hold at this level, but 1750 would be the last line of defense. If it breaks past that, then it's kind of stuffed for all sorts of reasons. So yeah, it's a very, very important zone. It's got a bit going on here. If you go to the bigger time frames, you can see it's actually very, very strongly consolidated at this level over particular periods. You can see right through there, and this part here. This is just another test of it. Moving average is a flat lining on the weekly. So, although it is trading slightly below them, I think that it can definitely still find the strength. So it's one of those watch and sees. I'm not really touching this one until, it starts to actually move up. I'm kind of, I guess, happy that if it's going to start a run up, it's starting it from a good base. I didn't really want it to start going long, from 1900. I didn't want it there in the first week of December, because it kind of, then it's going to have to do a lot. It's going to have a lot tougher time actually making some meaningful moves. So, you know, that said, you know, 1700, 1700. I mean, I'm talking about 1780, 1750. If we get a bit of a change of trend around these, you know, key zones, and it starts to break back into the 1800s, especially in the next week or two, I think that it would be very, very positive to see, you know, gold get back into the 19s and maybe, you know, and beyond. That would be the ideal trade. And then you can say we've nailed gold. You know, then we can say we got every ounce of gold. You get it? You get that one, Dave? We got every ounce of that trade out. You get it?
Yeah, sure do, mate. It's a bit of a dad joke, though. Come on, Ty.
It's a dad joke at 11 p.m. in Melbourne. But you know what I'm saying, right? Like we've got the biggest meat of the trade. So if I'm looking for a good move, I want a good long move, not just, you know, I don't want it to start. Does it make sense? That I don't want it to start. I don't want it to start its journey to go long at a high point, like, you know, 1880 or 1900. You know, it's far better to get it off a reasonable base, which is where it is now, around that 1750 to 1780 zone, maybe just slightly under 1800, because then, you know, you've got, you know, $100 straight up of easy trading, because you know I can get to 1900 really, really quickly. It was then just not that long ago. So you don't want the start of the move to be up here. You want it to be down here. So yeah, you probably should be rejoicing really if you're waiting for that move. If you shorted it, you've done well. I mean, I don't know. I wouldn't have shorted it. I'm not going to lie. I couldn't even see a reason to. I mean, it was tipping over here. It was starting to tip over, but even at that point there, I wouldn't have expected it was going to do that. You know, I thought maybe if it did that, it might weaken a little bit and maybe find some, you know, support here at the roll reversal zone. It just smashed straight through it. And that's what gold can do. Like, we know gold is a bit like this. Gold is a bit of a, you know, a bugger to trade sometimes, especially when it gets its move on. But at the same time, it can do the same thing on the way long. So, and I'd much rather be going long on it than trying to aggressively short it, because it can bounce back very, very sharply. Now, a question I did have on gold was this a double bottom that I would be interested in on the 4 hour? That's a no, mainly because it was such an aggressive drop. And although this is a level of support, it needs to proof a little bit better. It definitely needs to do a little bit more than this to, you know, if that pattern was in the direction of trend, you know, that's a different story. Now, if that reverses and breaks down below this level here, and it's actually a double top in the direction of the trend, that's a different story. And then that will actually open up a trade all the way to 1750. Okay, so that's probably an opportunity that you might want to keep an eye on. I can't remember who asked that question. I'm sorry, but I know you're watching the replay tonight because you weren't going to be here. You know, so rather than looking at it as a double bottom that's going to reverse what is a very aggressive trend, maybe look at it as a potential double top. If it makes a new low, that's actually going to continue on in the trend's direction, which is a far better trade. And that gets us to the 1750 pretty much, a little bit higher actually, 1760. So there's plenty of room for that trade. Okay. You see that one, Dave? Make sense?
Yeah, it does, Ty, it does. But I mean, I don't want that one to happen. I want it to consolidate here, and I want it to start moving up. Give me a lightning bolt, and I'll get in.
I'm quite happy with a 1780 low. If 1780 is where it bounces from, that's probably my position that I'd be most happy. 1750, I don't like it when it goes to those extreme lows that I would consider the danger zone, because that's the last line of defense. I don't really like the last line of defense. I think the 1780 is a sweet spot because it's kind of got a buffer. It's a very strong zone, like, make no mistake, very, very strong zone. So if it lightning bolted from here, I'd like to see it above the 20 moving average though. Just the same.
Oh yeah, I'd be happy for it to bounce around there for a little bit for a few days or a week or so, and then start to leg up.
Yeah, and the longer it bounces here over the next week or two, and it may well do it for next week because it's obviously non-pump payrolls. The more likely I believe that the move will be long. It needed to catch its breath, and quite often, a good consolidation zone around a very, very strong level will see it do its move up, probably more likely than the move down. So that's what I'd like to see its hold here to answer that question. That would be my preferred trade. But you got to put your boot on both shoes, or no, what is that? You got to put the boot on both feet. Yeah, and look at it from the point of view that if it does break down lower and closes below here, that definitely does form a pattern in the direction of the trend. So that is another way to play it, but that's probably not the preferred. The preferred would be a consolidation.
I'd be in short though if it did break down below that.
So would I. So would I. As long as I don't. As long as even though I don't want it to do it, I'm not going to ignore it because if it does it, there's a very, very high probability that it'll work out. Because it'll do it quickly too. Because we know 1750 is a very, very strong zone, so it wouldn't surprise me to see it do that. So we just got to be very, very mindful that it may happen, even though we technically don't really want it to. We trade what we see though, regardless. Oil is the other question that I very quickly look at the NAS. Rejections of the 20, all good. Nothing to see here.
Check it out on the 1 hour, 4 hour tie. There's a double bottom there.
Oh yeah, that's a definite
conservative entry there now if that doesn't close below.
Yeah, and a very clear target to aim for, and that pattern will absolutely match up to the previous. So no worries about that. Yep.
MACD looks all right.
Yep. Our looks all right too. Yeah, it's not a bad trade. It doesn't look bad actually. It's not a bad pattern. Not a bad pattern. It proofs well straight into that. It's definitely the MACD does look strong on the 4 hour, and and the daily it's coming off 2 big rejections off of 20 as well. So definite possibilities for that one. So that's a good spot. Ray, here's your Hong Kong. Interesting. What's it? We'll look at it on the bigger time frame. Looks like it wants to leg up, doesn't it? Starting to on the weekly, on the very, very big time frame, looks like it wants to leg up a little bit. It needs to hold this level here. This is a pretty strong support level for it though. If it holds here and bounces up again, I want to see it make a new high though. I wouldn't want to see a lower high. If you see a lower high here, Ray, and it closes below these moving averages and then pushes down and tests this level again, it's probably going to break. And then we'll be looking for the new lows again around that sort of 23, sort of 50 area. So just keep an eye on that. The high needs to break above these moving averages. If it does that, if it fails, gets the moving averages, fails to go higher, and then comes back and retests this level, I think the level is in serious danger. Okay, so keep an eye on that one. And finally, let's go to oil. Where is it? There it is. All right. Yes, it's found support where it needed to find support. It's already at 79. It's one of those ones where it's kind of in no man's land now, like right in the middle wedged between these 2 moving averages. It's going to have to break above those moving averages for me to get keen on the long again. And that's not going to be an easy time. You can see it there. It's wedged between them. So, and at a very key price point too, that sort of $79 mark is a pretty touchy sort of area, and it's got a bit of resistance in front of it. So for me, it needs to get above this level and close above. And if it does that, probably that 82 to 84 zone is the next target again for the long. Then we can say that the bounce is confirmed. And of course, by the time it does that, we're going to have a lightning bolt to that effect as well, right? So we're going to have a lightning bolt pushing up off this level, and that really opens it up to test the highs again. Failing that, of course, a break of this support zone is going to be significant. If it does that, it's probably targeting the low 70s again, and it can happen fairly quickly. So I think it's good because it's got 2 trades. There's no worries about that. I'd be happy to trade either way on this one, but it's got to break out of this little congestion of the moving averages here, right? We want to get rid of this. It needs to either close above higher, which will give it the lightning bolt up, or the harder task for it would be to break the support zone and make a new low. Then we've got a lightning bolt on the way down, and that gives it a pretty good trade as well. Yeah, down to sort of that 72 mark. So I think it's got $4 either side of it. I do like it now, but it has to do one or the other. I wouldn't be jumping in any of them because I think it's just as likely to do either, and it would more than likely make that $3 move either side if it gets that close in the right area. So hopefully that covers that oil question. So guys, that brings us to a close. Thank you so much for joining us on tonight's Q&A. I know we've covered a lot. If you missed something, just pop in onto the replay. Hopefully you'll be able to get it. We'll have a nice early Friday wrap in the morning. We'll see if we can get some decent market moves and see if we can actually maybe break out of some of these little zones that we've been talking about. Thanks very much, and I look forward to seeing you all in the Discord room tomorrow and of course early next week. Thanks everyone.